Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, November 28th, 2006, and the market's just closed. I've got the S&P 500 on the screen right now, and looking at the daily time frame here, we can see that the market obviously had a little bit of recovery in here today. The S&P 500 closed up just about 0.4%. They closed up 60 cents. And again, I think that drawing the trend line, it's easy to look at the lowest point on there. But again, I think it's easier to just, or more accurate rather, to take this other low here because it more accurately captures the essence of the trend. And realistically, looking at a trend line, whether you want to draw it from this point down here back in the mid-July lows or the one that I chose just a couple days later is completely irrelevant because it's just a guideline. It's not a reason to trade. Now today you could say, well, Brian, if you bought it right on your trend line, you would have made money. Yeah, you would have, but it's not every time that that's going to happen, and the market doesn't always pull back exactly to that level. It's like a moving average. It's just a reference point. It's something to compare the price action to. And again, breaking trend lines doesn't mean the market's about to reverse. Usually it just means the market's due for more of a sideways correction. So I think that's where we are anyways. It's good to see the market did show some signs of stability in here today. And it came down, and we've got these moving averages crisscrossing. If we look at the 30-minute time frame, yesterday I had pointed out the Fibonacci levels off of the recent rally, that is off of the November lows. So if we take a look at that again, we can see that the market came down and almost precisely tagged that 2/3 retracement level. So a lot of times you're going to see that type of action, that a widely watched technical area tends to act as support because enough people stop selling and some people start putting bids in that the supply-demand equation changes for no other reason than the perception is changing in that area and there's enough people taking action. Today, again, it almost exactly nailed that low, that 61.8% retracement, or the golden mean. I don't think it's a trading strategy, but it's definitely something worth noting, just like buying pullbacks to moving averages isn't a trading strategy, but it's something worth noting. And today it happened to be the area where the buyers did show up. From that area, once we got that little initial bounce higher earlier, we did see a higher low and a higher high later in the day. So we've got what's looking like a market that's turning back around. Now we've got the potential for resistance up ahead at about 139.75 or so, 139.80, because that was prior level of support. And it's approximately where we're going to have this declining 5-day moving average as well. So I think for the S&P 500 that we're starting to stabilize in here. It doesn't mean go out and buy everything. Take it on a case-by-case, stock-by-stock basis. I think breaking back below this afternoon's low at 138.40, or midday low, that is, that we're going to see a lower low tested in here and maybe a move towards that 138. And a lot of times those turn out to be the better bottoms anyways, when we have a little false breakout and then the market comes back down, shakes some people out, creates a lower volume low, and then it can turn back around. And we've still got the longer term moving average declining, which tells us to be careful in here. So it's not all clear on the market. It's encouraging to see that the market did show some stability in here today, and that leads me to believe that maybe this is going to be just a little one-day pullback. So we'll have to see, but more neutral than anything right now. The semiconductors, SMH, these guys looked like they were going to fall back below that level of the prior breakout at the inverted head and shoulders pattern at the 34.45 level. And you can see that this market was, in fact, the SMH was down 18 cents, but it came in here basically, right back to that important level. So jury's out on this market as well. We've got those longer term moving averages that are declining. We've got the potential for resistance up at $35 a share because that's where we've seen prior support. And there's probably people that are looking for a rally back up to that 35 so they can get their break even on it. So this market in here too, we haven't even seen these moving averages crisscrossing. I would expect another pullback down towards 34 and a quarter at least before the market starts to show more solid footing in here. So be careful with the semiconductors in here still. We don't have an all clear, but we are at an important level because it's been this prior level of resistance in here, now looking like support. And we're also at the conjunction of that 50 and 200-day moving average as well. But it's just telling us that it's time to be careful, not time to go out and buy. Nasdaq 100, this market is also continues to hold its uptrend line, and that would a test of the trend line would bring it down towards about $43 a share. Looks like it's finding some support above that rising 20-day moving average. If we look at Fibonacci in here and just take a look at the November low, let's go ahead and do that. We can see that. Let's see. Let me get my tool here and draw this. So we can see that this market didn't quite come down to the 50% level near that 43.25, and that's kind of where we were looking for a little bit of potential support, was 43.25 or so. So maybe we're going to get another test down there, and again, maybe this market makes a lower low, so fakes some people out, makes a lower low here in the next day or two. Then we can be in a better position to turn around from. But more neutral than anything on these Nasdaq 100. But short term, the longer term moving average is still heading lower, so don't get too aggressive on this rally. So we've got a very mixed picture in the market right now. We've got what's looking like a neutral, so it's firming up a little bit in the short term. The intermediate and long term are still higher though. MidCap, symbol MDY here. If we take a look at the MidCap Trust, and what the heck's going on with my computer lately? Mid-caps, we were looking for a test of the 145 level. We got that yesterday. Market continued to show signs of stabilizing above that level, so this prior level of resistance looking like it's acting as support. It did come down a little bit too quick, though, to really trust this thing for a turnaround. So we're going to have to keep a close eye on it here. We could draw a trend line in here that looks like this right now. Doesn't really give us much insight into the trading here, though. We are starting to see a little bit of signs of stability. We've got a higher low, and we've got a little bit of resistance now at 145.80. Again, I think you still need to see this green moving average come down and flatten out before you can trust a rally. So it still seems like the best case is to just take it slow in here for at least another day, maybe 2 days, while the dust settles from that larger sell-off. Let's take a look at the stocks that we've been in. Let me bring up this one first, which is FormFactor. FormFactor, I hope you caught my intraday post, because about 15 minutes into the market open, well, first of all, yesterday we sold this stock short at 38.55 after some original strength. It showed that strength and then broke down. And this morning I said it was basically 35.05, and I said you want to cover right here, right now. You did have some time to cover in that area as well. There was about a 45-minute period or so where you had the chance to cover around 35.25, and based on yesterday's short sale at 38.55, that would give you a nice $3.30 gain. The market rallied right from there. Now, the reason I put that intraday kind of announcement there to cover the position was the market sold off. It gapped lower. We were already $1.50 in the money yesterday. It gapped lower. Looked like it was trying to find a little support at S1, caved into S2, and whenever you've got a nice 2-day profit like that and it comes down to an important level like S2, I always suggest taking profits, and it happened to be the perfect time to take profits in FormFactor. So that was a great short sale from yesterday, and it's very, very satisfying to make a nice short sale profit of a 10% magnitude when the market's declining, because a lot of people are losing money in this market. So UMC we were also involved with, and UMC we had gotten involved in back here at 3.25. Yesterday I suggested raising your stop to 340. We were stopped out today with a gain of 15 cents. Zoltek, symbol ZOLT. We got in short this one yesterday at 22.90 after the initial strength. Today I said that you should put your stop at break even, and we were stopped out at break even in Zoltek. GNCMA, this is General Communications. We were looking to buy this stock above $15 a share today. It never got above that level, so there should have been no trade taken in GNCMA. In SONE Corporation, symbol SONE, I said we want to buy this stock at 506. You had your opportunity right there. You had your opportunity all day as the stock seemed to just kind of fall asleep. Our stop was down at $4.94. I think you can raise your stop to $4.99 right now. So let's just put that risk about 7 cents away theoretically. Longer term, it's still looking like a very good stock. There's a nice volume pattern in here. Probably needs to get above 515 or so, and I'll probably add to my position if it does get above that 515 level. Vanda, symbol VNDA. Not to be confused with LaFonda, Kip's girlfriend. Vanda is a stock that we wanted to buy at $14.70, and I said if it gets up to 15, put your stop at break even. Should have been stopped out of Vanda at break even today. Boom, this is the symbol for dynamic materials. What we were looking for in dynamic materials was to see the stock rally up to $29.50 at first. It did rally up to $29.50 and then to sell it short at $29.35 as it started dropping back down. We had that opportunity to sell it short. Our stop was $29.68. I think that you can put your stop at $29.62 in shares of Boom. Lastly, we had Diodes Corporation, symbol DIOD, and on Diodes, we were looking for a rally above $39.80, above $39.90. We were going to short it at $38.80, and then we were going to put our stop at $40.20. I think right now you can put your stop at, let's say, $40.05. So you should be involved at $39.80 with a stop 25 cents away right now.